Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is February 20th. Quickly wrapping up another month here. Today we're going to take a look at American Waterworks. This is a utility company out of the utility sector. Let's jump right in. And if you are new to the channel or just want to help me out, hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that thumbs up if you find any value in the content. And don't forget to ring that notification bell down below so you're notified whenever we put out any new content. Doing that really does help a small YouTube channel grow like mine with the YouTube algorithm. And drop a comment down below. Is this one in your portfolio? Is it one you're watching? Are there other companies in the utility sector you like better? Would really like to hear from you. Let's keep rolling. This is the Vested Interest Stock Screener. This is how I look at a company on a high level and see if I am interested in investing. It's how we are going to run through the videos. This is how I set up the videos for you on every video we go through. So we are going to look at the business first. We're going to look for growing free cash flow. We want a growing dividend over time. Dividend payout ratio of 75% or less. Now, this does not apply to companies like REITs, BDCs, some other companies. REITs, for example, they must pay 90% or more out of their free cash flow to their shareholders. BDCs are under similar obligations by law to do that. So we don't use that 75% or less for companies like that. Even utility companies like this one, I don't necessarily use that because they typically pay out more of their free cash flow. Check valuation based on dividend yield theory. We'll take a look there. Buy below current cost basis or within 15% of a 52-week low. So what we're looking for here is if it's in my portfolio already, I set 15% of its 52-week low as kind of the baseline where I want to keep my cost per share basis. It's also where I look to enter a position. Now, if it is already in my portfolio, I try to buy it under my cost basis. If it's not applicable there, I use the 15% of 52-week low. Return on invested capital, return on equity, I like 10% or better. And earnings per share growth, I'm looking for 5% plus. For financial companies like banks, I use price to book. You can use price to book for any company. Just if it's not a bank, make sure you're comparing the price to book you're looking at to other companies in the same sector. Must meet 5 of 8 to be investable. Or if it's a financial company like a bank, 6 of 9. Now, that does not mean if it meets 5 of 8 or 6 of 9 if it's a bank that I'm automatically going to invest. It goes onto my watch list, and then I do more of a deep dive on the financials, do a discounted cash flow analysis to see what I'm willing to pay for it, and then, and only then, do I potentially add it to my portfolio. Now let's get back to American Water. Check them out at www.amwater.com. That's www.amwater.com. That is their homepage where I pulled this information from. We are the largest and most geographically diverse publicly traded U.S. water and wastewater utility company. We employ more than 6,500 dedicated professionals who provide regulated and market-based drinking water, wastewater, and other related services to an estimated 14 million people in 24 states. So that's really what they do. They are focused around water, whether that's drinking water or wastewater. They are in the water business. And you can see over here in the map, they say they are employed in 24 states. I think I counted 14 states, so some of them are not highlighted here, but California, Iowa, Missouri, Illinois, Indiana, Kentucky, Tennessee, Georgia, West Virginia, Pennsylvania, New Jersey, Maryland, even out in Hawaii is where they have their regulated water and wastewater operations. You can see here down below 80 surface water treatment plants, 490 groundwater treatment plants, 175 wastewater treatment plants, 53,500 miles of transmission, distribution, and collection mains and pipes. That's a buttload of plumbing. 1,100 groundwater wells, 1,700 water and wastewater pumping stations, 1,100 treated water storage facilities, and 73 dams. So they must have their hand, if they are also employed in dams, that maybe that accounts for the other states that aren't listed here where they have their hands in some power regulation there. But again, www.amwater if you want to know more about this company. And if you are investing in a company, this is where you should start. You should be looking and understanding, how does the company make its money? What do they do? Now on to the reason we are taking a look at them, down 1.33% on the day. We are talking about American Waterworks Company, ticker AWK, out of the utility sector, closed out the day at $121.18. 52-week range as low as $114.25, as high as $153.43. Definitely closer to their 52-week low, and if they continue to drop, they may retest that low. Average volume of 1.1 million. Today's was 1.7. Big sell-off overall. Hopefully you can see that right there. Big drop on the day and then kind of leveled out towards the end of the day. a beta of 0.65. So typically this company is less volatile than the overall market, although a lot of volatility throughout today. Price to earnings ratio, a little bit high, 24.73, but I have been watching this one for some time, a little over a year now, and it always seems to trade at a premium for whatever reason, and I'm assuming that's because they are involved in water, and water is not going anywhere. Earnings per share, EPS sitting at $4.90 per share. Earnings date is coming up May 1st through May 2nd. So if you are looking to see how their earnings are, the next one will be May 1st through the 2nd. Tune in for that. For dividend yield, $2.83 paid out on the year. They are a quarterly payer. We'll see that here in a little bit. And they have a nice starting dividend yield, 2.3%. Obviously, if you were to get them a little lower, that would be a higher yield. Ex-dividend date was February 7th. Looks like they are going to pay out March 1st. And 1 year target estimate, at least according to Yahoo Finance, where I pulled this information from, $141.56. So they see it with a significant upside as far as price appreciation from where it currently sits. Now, I'd like to get into statistics and look at dividend yield theory. To do that, you'd go over to statistics, you'd go down to dividends and splits, you go down their 5-year dividend yield average, 1.63%. You compare it to its current 2.3%, over here 2.3, same numbers. I know it says forward annual dividend yield, but it's the current dividend yield. That's what they're looking at. And since it is higher, that speaks to some undervaluation on this one. Not only potentially undervalued according to dividend yield theory, but with a nice margin of safety right now. Payout ratio is low, 56.68, so that's under the 75% I'm looking for. So far, numbers look pretty good. Now we're going to get into the financials on this one. And if you are interested in individual companies, you really should be looking at the financials. You can look at their balance sheet, their income statement, debt to equity ratios. Are their margins expanding or contracting? Is their revenue growing over time? Are they paying down debt? A lot of good information on this overall. We are going to look at free cash flow. We want growing free cash flow over time because typically if a company has growing free cash flow, the dividends are growing along with this. Now with utility companies, they are very capital intensive. That means that they are constantly reinvesting back into the company. All those pipes that we saw, the thousands of miles of pipes that they have to dig those up from time to time and redo them, right? They have plants that they operate that need to be refurbished from time to time. I'm in construction management, and we have several buildings that we manage. A lot of money goes into keeping those buildings up to date. HVAC units go down, plumbing needs replaced, lights need replaced, carpet over time, all those things need replaced. So they are very capital intensive. So you will see that here in the free cash flow, negative $432 million in 2020. 2021, $1.3 billion in negative free cash flow. 2022, negative $860 million, and to date in 2023, another 860. Looks like the same numbers from 2022. So we'll have to see how the rest of 2023 shakes out. Not a good metric overall. I would say not growing free cash flow, but again, very capital intensive. I'm not concerned with this. If you pulled up any utility company, it's going to look very similar. This is what you should be looking at, though. Are they repaying debt? Are they paying down their debt? They are repaying debt, but you'd want to look at, along with this repayment of debt, because they are paying down debt, were they issued any debt for that year? So far, other than the free cash flow, I would say the numbers look pretty good. Let's keep going. Now, I always recommend more than one source. Another one that I like is stockanalysis.com. You pick any sources that you like. Just make sure you're looking at more than one so you can make sure the information you're getting is accurate and up to date. So I like stockanalysis.com, and they have 7 stock analysts that have taken a look at this. They call it a consensus buy, and if you were to go to this homepage, stockanalysis.com, you could click on each one of these and see how many called it a strong sell, a hold, a buy, or a strong buy. Looks like just enough either around a strong buy or a buy over a hold or a sell to call it a buy, though it is right there on the edge, so it's getting close. Now, they have a low estimate, these analysts, of 135. It currently sits 11.39% lower than their lowest estimate. So if it was to come back up to this 135, you'd get a 11.39% gain. Average estimate of $151.43, which is a little bit higher than what we saw with Yahoo Finance on the previous page. That would be a 24.94% increase in the stock price. And if it happened to hit their high of $169, it would be a 39.44% increase in the stock price. But it currently sits lower, much lower, 11% lower than their lowest estimate, which I like to see all the analysts whenever even their lowest estimate is higher than where it currently sits. I do like that. Now, I like to get into the statistics here and see how well the company is reinvesting its capital back into itself. And to do that, we look at ROE, which is return on equity, and ROIC, which is return on invested capital. And I like 10% or better typically. This is return on equity 9.7%. Close enough to the 10% I'm looking for that I call that fine. The return on invested capital is a little lower, 5.11%. But again, for utility companies, that's pretty much the standard. Again, pull up some other utility companies and you could compare them to each other. Earnings per share growth, I like 5% or better. This is sitting at 7.4%, forecasted over the next 5 years. That looks very nice. And very nice revenue growth, 7.42% expected over the next 5 years. So far, excuse me, other than the free cash flow, negative free cash flow, the numbers are looking very good on this one. Now we're going to look at the dividend history. They are a quarterly payer. They pay out in the March, June, September, December timeframe. Again, very low payout ratio. This says 57.76. I think Yahoo Finance said 56. I mean, close enough. Under 75% for a utility company. This is very low. Leaves them a lot of room to increase that dividend, and they are 8.02% dividend growth. Nice high single-digit growth on this one, and a lot of runway to increase that dividend over time. And they are. Going back to February 5th, 2021, 55 cents. They raised it up May 10th, 2021 to 60 cents and some fractions of a penny. Again in May 2022, up to 65 cents and a fraction of a penny. May 2023 looks like the most recent raise, up to 70 cents and some fractions of, not quite 71 cents. And I would anticipate in May of 2024 here them continuing that trend and increasing the dividend. Well, that is really it for American Waterworks. What do you think of this company? Like I said, is it a utility company that you have in your portfolio? Is it one you are watching? That's out back. There is no more snow anymore. I did take a nice shot this morning. I'll have to update this picture. It's looking a lot more like spring around here in Michigan. So I'll throw that up next time we're here. But that is out back, and it's making me ready for summer, to be honest with you, with no snow. But we're in Michigan, so it definitely could snow tomorrow. But there's a lot of water out back, so it kind of ties into this video. Hopefully you enjoyed the video. This is Shane, or I'm sorry, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below and join us on this journey of financial freedom. Join the vested interest community. Doing that really does help out a small YouTube channel like me. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like American Waterworks you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll try to work it into the rotation. Now, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in your for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount. Not comfortable losing. Always do your own research. Best business, circumstances, and select criteria, or seek the advice of a certified financial advisor.